Hi, I'm Seth Freuberg. I'm the Director of Options Trading here at SMBU in Manhattan. I'm also the head trader of SMB's Options Trading Desk. So this week I would like to talk about losing money on trades. No one likes to lose money on a trade, and most people have a lot of trouble handling that emotionally. And the reason they do is because they mix up losing money on a trade with failing. They feel like if they lost money on a trade, that means they failed. But that is not true, and it is certainly not the right way to look at it. And I want to go through this with you. It's really, really important to understand this principle. Since the first of the year, traders who trade like we do on SMB's Options Trading Desk, we trade market neutral option strategies. Well, when the market is selling off this hard or rallying like crazy, but usually you see this problem more, in a sell-off like we've had, which is a fairly serious sell-off that has occurred, very serious concerns about the world going into a recession. Every day you wake up, the futures are way down day after day after day. And so this type of an environment creates struggles for market neutral options traders. This is not our kind of market. We don't know when we enter our trades that it is going to turn into that kind of a market, but once we are in it, it is not our kind of market. We are better when the market trades in relatively mild ranges. So we're going to experience losses in this period of time, and that is natural, and that is normal, and that is expected in this kind of trading. Now, so we need to stop and think. When the market trades in a reasonable range, we're going to win. When it trades outside of that range, typically we are not going to win. No strategy works in every market. It's not possible to find a strategy that will win in every condition. Otherwise, everyone would quit their jobs and trade that strategy. So every strategy, therefore, has a weakness, and the weakness for market neutral options traders are non-range bound markets, markets which have basically pierced their ranges. Now, when we take a strategy and we backtest it, we are going to find that there are going to be certain markets where it makes money, certain markets where it loses money. We have certain strategies such as the bearish butterfly, which has backtested expectancies of, let's call it maybe conservatively 4 or 5% a month. So that's 48 to 60% a year expectancies on that strategy. Do you know that typically a bearish butterfly can lose 1, 2, 3, 4 times a year and still produce those kinds of expectancies? And these are monthly trades, so there's only 12 bites at the apple for bearish butterfly. So if you have a strategy that makes money, say 8, 9 times a year, it's going to lose money 3 to 4 times a year, yet that same strategy, in the case of a bearish butterfly, may have an expectancy of 4 to 5% a month. Is anyone going to be real upset about a strategy which is going to return 48 to 60% a month? I don't think so. And so if in the course of trading that over a year, you lose once or twice or 3 times, have you failed? I would say definitely not. You've not failed. You just had a trade in a month where that strategy is going to lose. And so you haven't failed, you just lost money that month, and there is a difference. And so the point I'm trying to make is there is a difference between failure, and failure I would define as having a good system and not following it, whether you made money on the trade or not. There's a difference between failure and the occasional loss that you will experience on a perfectly valid strategy that simply cannot make money in that particular set of circumstances, but otherwise produces a great expectancy. So think about it. Those of you who are baseball fans, the greatest hitters in history hit 400. Ted Williams and Ty Cobb and people like that. It's unheard of to hit 400 in the modern era. I don't think it's happened in 60 years. It almost can't happen anymore. So 400, anyone who wants to hit 400 would probably be the most amazing athletic event of the century if that were to occur again. And what does that mean? That means the batter is out 6 out of every time he gets up. 6 out of every time he fails. Yet, if he succeeds 4 out of 10 times, he will be the greatest athlete of the 21st century by a mile. So is that guy a failure because he gets out 6 out of 10 times? No, he's a tremendous, unbelievable, record-setting success. So there's a difference between failure and a particular loss in a particular situation. So what I want you to do, and the takeaway I'd like you to accept from today's discussion, is that you cannot consider yourself having failed if you lost on a particular trade. No one human likes to lose on a trade. But if you don't take the big picture and you don't look at the annual returns and the annual expectancies of your strategies, and you get hyper-focused on a particular loss or maybe 2 losses in a row, if you get hyper-focused on that and lose your perspective, you may not be able to be successful as a trader. Just as it is very foolish to get overly excited about a win and double or triple or quadruple your capital once you've had a win, which then puts you in an extremely dangerous situation and almost guarantees that you will knock yourself out as a trader because you've gotten greedy. Just as it is ridiculous to get overly exuberant about a gain, you cannot let yourself get overly down about a loss, or you will never succeed as a trader. So please remember, there's a difference between failing, which I would define again as not following your disciplines. That's a failure. If it's a solid strategy and you haven't followed your disciplines, I call that a failure. Versus losing money. Losing money is expected. You cannot find a strategy where you will never lose money. And if you think that you will find that strategy and have found it, please let me know, because I will drop everything else I'm doing and just do that strategy. But I'm being sarcastic because that strategy does not exist. Every strategy has a weakness. Every strategy has a market that is not going to be opportune for that strategy. But because we're not psychic and we don't know when that market will occur, we have to be very consistent in applying our strategies every month. So please don't make the mistake of considering loss on a trade as a failure. They're 2 completely different things. If you understand that, and really internalize that point, you have a chance of being a successful trader. Thanks very much, and we'll see you next week. To learn more about the bearish butterfly, please click on this link and learn more about this powerful strategy which responds very well to different market conditions, particularly the kinds of conditions that we're experiencing in the sell-off in the market today. Thanks very much.